Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this educational presentation where today I have a unique webinar for you where I'm going to present my special holiday trading gift to you. These are four components that usually we incorporate in our methods, and they're proprietary or we keep them in-house, but I'm going to give them to you so that you can either add these to your current method, and we really feel they'll increase your odds for consistency, or you can build a method or a strategy based on these components. But we really feel that they will increase your odds for trading, winning trades so much more than what you may be doing right now. Now, on top of that, during the end of the presentation, we'll talk about a couple of more bonuses and more gifts that we'll be presenting to you. All right, but before we start, let me just share this old chart with you here. Let's look at this chart of Adobe. And someone just looking at this right offhand would say, well, I don't really know if there's any kind of trend here. Doesn't know if we're going up or down. For all intents and purposes, we're actually going down, right? Because the last couple of weeks have been going down. So you say to yourself, well, I went to that chat room and the guy didn't like this stock. He thinks some bad news or bad earnings are going to come out. So I guess I'll sell, right? Well, the component that we're going to be teaching you right off the bat would have said, we're not in a downtrend. We're actually in an uptrend. So you would not have sold it all. And then thinking about it, you could have added any strategy or any method to the upside to actually buy. The second component would have told you where to place your stop. The third component would have actually told you where to exit, which is right here, and you would know that in advance of getting into the trade. And the final component would be how to manage the trade while you made 22.5 points. So this is what we're going to be giving you today. This is my special holiday trading gift to you. And once again, you can start applying these as soon as you like. And everything you're going to be seeing today is displayed and coming from our platform, the PTS Primo Charting platform. This is the educational platform I developed with proprietary strategies that actually teaches you how to trade. So welcome once again. My name is Stephen Primo, president and founder of Specialist Trading. As you can see, we're all about educating you as traders. That's the one thing we focus on. That's what makes us a little bit different from other webinars you may have attended, and that our only focus is simply to educate you. Why? Because we feel this is what's missing from all traders and the way they actually look at the markets. Most traders are taught to, go to some blog and find out what they like, or to wait for the earnings to come out, or to basically have someone tell you what to buy or sell on TV, and that's how you trade, right? This is the way it's always been taught, myself included. When I started 46 years ago, this is the way I was taught. But it's been estimated that 85, almost 90% of all traders fail. So obviously this really doesn't work. There's not a lot of consistency in blindly following someone or something else. What you need to be is taught sound fundamental tools, methods, and strategies that have stood the test of time, so that ultimately you can make your own trading decisions. This is what we're all about at Specialist Trading. And this is the same way I was taught, and hopefully you'll be able to gain the same benefits and trade 46 years as well. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these components, these edges, but please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. Also, since we are an educational company, all examples are strictly for educational purposes only. Now, since we are an educational company, we're always trying to educate our students and also people that aren't students yet. And one way to get more education is to follow us on Twitter or X, whichever you like to call it. I post anywhere from 4 to 6 different snapshots a day of signals our methods have generated to little bits of financial wisdom. So if you'd like to get free education on a daily basis, please feel free to follow us on Twitter. Now, we're also live streaming this on YouTube. So if you like this, please be sure and subscribe to this. We're going to give a lot more of these live streams, and so far we're getting a wide audience of people to see this. And this is another way in which to stay linked with us and follow us and to subscribe on YouTube. Okay, so remember, my goal as an educator is not to force feed you signals, but to teach you how to trade with a specialist edge. And you'll see that in today's educational presentation. Now, a few things before we begin. Please, we have a good crowd here today, but if you have a question, wait till the end to ask questions. I have a lot of slides here, I think upwards of 140 in today's presentation, so I don't want to stop for every slide to ask and answer a question, and we'll be here far too long. Also, this is being recorded, so if you have to leave early or if you're having technical issues, don't worry. Each and every one of you will be sent a link to this recording, okay? So remember, please ask questions at the end. And with that stated, let's begin today's educational presentation. And I want to start off with something that my mentors taught me, because I started my career on the floor of the Pacific Stock Exchange. And even though I was on the trading floor and I had advanced information and access to computers at the time, remember, this was the 70s. And even though I thought that I was ahead of the game, I really couldn't make a dime. It took me a long time to actually become even breaking even. It was just really tough my first 2 years. Here's what my mentors taught me. These were traders themselves on the floor who had been trading around 40 years each. And they said, Steve, trading is really simple, but it's the trader who makes it more difficult than it has to be. I mean, think of that. Now, when I was taught this by my mentors, I had about 3 or 4 screens in front of me. I had maybe, I think, upwards of 60 to 70 indicators I was looking at. I was listening to all the news at the time, and we didn't have chat rooms or trading rooms then, but I subscribed to every newsletter. And I was really overcomplicating my trading because I thought this is what's going to make me successful, right? This is what I always was taught. The more information you have, the better things will be for you. But what they taught me is that it's actually the opposite. It's the less things, just focusing on the consistent things that work. That's what will make you a successful trader. So think of it. How many screens are you looking at? How many traders do you follow, or chat rooms, or how many guys on TV do you listen to? Are you overcomplicating your trading with too many indicators, too many markets to follow? Keep it simple and you'll get on that road to consistency much quicker than you ever imagined. So in order to be consistent, you must always ask yourself these 4 questions. So these are the gifts I'm going to be giving you today. Once again, they're incorporated, and I would say about 3/4 of all of our methods or strategies, and I'm going to give them to you today. And you can actually add them to your current trading method that you have, or you can incorporate them and build your own method. And I really think you'll be that much more consistent, okay? All right, so let's start out with your special gifts here. Here's the first question you have to ask yourself. Am I on the right side of the market? I know a lot of you will always say, well, this is silly. I'm always on the right side of the market. I never want to go against the market. Well, that's true. But if all traders are thinking that, then why do, once again, 85 to 90% of all of them fail? It's because you're on the wrong side. I mean, think of it. When you buy something and it goes down, you're on the wrong side of the market. It wants to go lower and you're betting against it. And conversely, when you sell something and it goes up, you're on the wrong side. You're going against the flow of what the market wants to do. And I don't think it's your fault. I think most of us are taught faulty ways in which to find out what the market wants to do. Let me share with you what I think. Let's go back to that chart again, okay? So now we're looking once again at this older chart of Adobe. And we just look at it right off the bat. We say to ourselves, well, there's no clear trend. It's going up, then down, then back up again. But here's the first thing we do. We apply the 50-period moving average. You've heard me speak about it before. We call it the buy-sell line, because it'll tell us whether we're a buyer or a seller. Now, even if you trade 10-minute charts of a stock, or if you trade a weekly chart of cryptos, or a 15-minute chart of the British pound, it makes no difference. You should have a 50-period moving average always on your chart. And then once you apply the 50-period moving average, ask yourself, where is price in relation to the 50-period simple moving average? In fact, I've told students to write that on a little Post-it and to put it on their computer screen. That way, you'll always ask this first before you pull the trigger, before you follow some advice from some guy in a chat room. Ask yourself, where is price? Now, if price is below, that means the overall trend is down. And we never want to be out of sync with the overall trend. So if the overall trend is down, we're going to be a seller. That means we're looking for sell signals in a particular strategy or method. But in this case, the overall trend is up. So what's that telling us? It's telling us that we're a buyer. We're not going to sell, and the trend is not down. Now, let's say you're a candlestick student. You say to yourself, well, wow, I see a bullish engulfing pattern right there. Okay, well, now this is no guarantee that it's going to be a winner, but you put the odds in your favor because you are in sync with what the market wants to do. You're in sync with the overall trend, okay? All right, so let's say you want to buy when price trades one tick right above there. Now this leads us to our second question, question number 2. I know most of you are thinking, yeah, that's where do I get out with a profit? No, we always have to think the opposite first. Where do I place my initial stop? Which is another way of saying, where do I get out if I'm wrong? Because we're not ever going to be right 100% of the time. And plus, this is going to be handy, and this is going to help us with answering question number 3. Now, we have upwards of 6 or 7 different stop placement methods in our courses. Each and every one of our courses has this kind of a smorgasbord for you to choose from. Let's just choose a very basic one right now. And these are called short-term pivot lows. Okay, what this means is if you're going to be buying here, you go back and reverse time and see what the last low was. Okay, and a pivot low is where you kind of make this kind of V approach here. We have a low, a lower low, and a higher low. And this usually means that we're most likely going to be stopping right here or not going in there. And if we trade below there, that means most likely we're going to be going lower. So this is a great place to place your stop right here, okay? Once again, we have different types of stops. We have low risk stops, high risk stops, different types of trailing stops. This is just your standard pivot stop, okay? Now, this leads us to question 3. What is my profit target? Meaning that where am I going to get out if I have a successful trade? Well, this is why we always want to find out our stop placement first, because the first thing we do is we measure where we enter. If we entered here and say it went against us and we exited here, how much would we lose? Well, in terms of points, we'd lose 11.25 points. That's our risk. We're risking 11.25 points. So right off the bat, even before we get into the trade, we can ask ourselves, well, is that too much risk for me? I can't afford that, or is that okay? I can take the trade. So see, you're defining and determining all these things even before you got in. Most traders do the opposite. They figure it out once they're in the trade. But that's what a professional trader does. He figures out everything before he gets into the trade. So we're risking 11.25 points. If you feel that's okay, you have a big enough account to manage that, or you can feel okay trading with a small amount, all right. So what we want to do is double that amount. In other words, if we're risking 11.25, we want to make twice that amount. That would come out to be a total of 22.5 points. And this would give us our exit right at 247. So in other words, what we want to do is make twice the amount of what we're risking. This is called our risk-reward ratio. We're risking 1 to make 2. All right, and this would mean we'd exit at 22.5. So even before we'd enter, we know where our stop is and we know where our exit point is. Now, this brings us to the fourth and final question, which is, how do I protect my profits? In other words, let's say the trade is going your way. You haven't exited yet, but it's going your way. How many times have you been in a good trade and you're feeling good about yourself? You feel, hey, this is great. And then you, walk away, or maybe you go out for the day and you come back home and now it's turned into a losing trade, right? It's the worst feeling in the world. And then you have to hold on. Some people even buy more to make it back. And then it turns into a big loss. This is probably the worst feeling a trader can have, knowing that at one time they had a profit, but it turned into a loss. So what you want to do is protect your profit once you've gotten to a certain point. This is the answer to question number 4. And we call this our 50% rule. So what happens is when price goes upwards of 50% to your exit point, half the distance, this is where you want to move your stop to unchanged. So in other words, let's follow the price here. We see that, well, it didn't really much do anything. Then we got into the trade and it's starting to go our way. Ultimately, it traded at the 50% level. So what does that mean? Well, that's our trigger that we're no longer going to leave our stop here. We will move the stop to our entry price where we entered. This means we're not going to lose anything. We have no risk. If price, all of a sudden some news comes out and price rolls over and comes down, well, at least we didn't lose anything. See, most traders do the opposite. They keep their stop in there, or maybe they just hold on and then they say, well, I'm going to cancel my stop because it's got to come back. And then you turn into a long-term investor, right? This is what most traders do. This is why 85% of all traders fail. Once you have a plan like this in place, trading is really simple. Now, one of the things most students ask me is they say, well, Steve, does it have to get exactly to that 50% level? No, it can get somewhere close to it, above or below. It makes no difference, just as long as it's in the vicinity of halfway to the distance of where your exit should be, okay? Now, once that's happened and we've moved our stop to the entry point, we're playing with the house money. We're not risking anything. And so all that's left is the only thing we have to do is to watch the trade unfold. See, trading is really simple. Once again, it's the trader that gets in his own way. So this is simple. All you have to do is sit back and watch. And I've often said this, if you're trading right, it's very boring. It's like fishing. It's like you go out on the lake or the river or even the ocean, you cast your line and you just sit and wait. It's the same thing with trading. You just have a plan in place. You find out your entry, your stop placement, your exit, and then you just kind of sit and wait. If you're going crazy, making phone calls on 2 or 3 computers, looking at 3 or 4 screens, having the TV on, that's not really trading. That's more gambling. Okay. All right. So all we have to do is just watch the trade unfold. We're not risking anything. We're not losing anything. And if price comes down, the worst, we'll break even. And then ultimately, guess what happened? We get to that point, we have a 22.5-point gain. That's how simple trading should be. Let's look at another example, okay? So just so you can understand this. And remember, you can start using this right away. Use these components. This is my gift to you. Add them to your current strategy, or you can construct a strategy based on them, and it will increase your odds for consistency. All right, let's look at this. Let's say you're a technician and you're looking at this older chart of FSLR, all right? And you see this formation, you say, hey, wow, in my technical analysis class, I see that's a very prominent bullish wedge. So what this tells you is that in technical terms, if we close above here, that's a very bullish sign, a sign to go long, according to standard technical analysis, okay? So you kind of wait, and guess what happens? On the very next bar, we close above. So you're all excited. You say, hey, this is a technician's dream. This is 101. I'm going to go long. So you decide to buy. But remember, this goes against everything we teach. What is the first question we want you to ask? Remember, question number 1 is, am I on the right side of the market? It doesn't matter how prominent a pattern is. It doesn't matter what that guy on TV is saying. Ask yourself first, are you on the right side of the market? And the easiest and simplest, and probably in my opinion, for the last 46 years, the most profound and powerful way is to simply apply the 50-period moving average. All right, so we thought we were going to buy here based on this pattern, right? But once we apply the 50-period moving average, we ask ourselves, where is price in relation to the 50-period simple moving average? Now, originally, price was above here, but look what happened. We have 1, 2, 3, 4, 5, 6, 7 closes below. That's more than enough to tell us that the overall trend is down. All right, all you need are 3 to 5 closes, and it's up to you, 3 to 5 closes below to tell you that the overall trend is down, and 3 to 5 closes above will tell you the overall trend is up. So should we be a buyer according to this first rule? Absolutely not. We're not going to buy here because the odds are against it working for us. Sure, every once in a while, you will see a great signal below the 50-period moving average, and it'll go straight up. Or you'll see a great sell signal above the 50-period moving average, and it'll go straight down. But remember, that's just like the slot machines in Vegas, because they're programmed every once in a while to give you a big winner. And why? Because they want you to stay there, because they know over time you will give it all back and you will lose all that money you made on that one big gamble. It's the same way with buying below the 50 and selling short above. Sure, you'll get a big winner every once in a while, but if you keep trading that way over time, take it from someone who knows from firsthand experience, you'll most likely give it all back, okay? Now, I just heard from someone that they're not hearing anything. I just want to make sure that you are hearing everything clearly. I know I have my microphone on, but I've gone through webinars before where people have not been able to hear me. So if you can you go to the chat box or the question and answer box and just type in yes or no? Oftentimes it's your own internet connection, but if you can hear me, just type in yes or no so I can know, and maybe I'll start over, or at least you'll be able to make sure. Someone's saying, now I can hear you. Great. Okay. Okay, great. It was a headphone problem. All right, good. I just want to make sure you're hearing all this, okay? Because as I said, if you can believe it or not, I've given a full hour presentation before and then realized that no one was hearing me. So I had to re-record the whole thing. So I just want to make sure you're hearing okay. All right, great. Okay, so price is below. We know we're not going to be a buyer. Once again, every once in a while, will get a fantastic signal, but over time, go back. In fact, if you don't believe me, go back and look at your last 10 or 20 trades. I can almost guarantee you that the reason you had losses was because you were buying below the 50 and selling short above the 50. Now, when we say sell, obviously, if you're long a trade and you exit with a profit, sure, you're going to sell above the 50. But what we mean by selling above the 50 is going short. betting for it to go down and maybe buying some puts, all right? Okay, so looking at this example in FSLR, we are not going to be buying, all right? And judging from what happened in the next 2 days, we're glad we didn't buy because look what happened. It's not going anywhere. All right, so now that you know that you shouldn't be buying, you say to yourself, well, is there anything according in my toolbox that I can sell, right? Because remember, just because you're above or below the 50 doesn't mean buy or sell at the market. It means you have to have some structure. You have to have a strategy or a plan in place. So remember, you're a technician, so you say to yourself, well, this is a ledge here. If we break that ledge or trade right here at this dotted line, well, then I'll sell short. Okay, all right, good enough. We're going to break that little line, that trend line. Okay, so you're in sync with the overall trend, which leads us now to question number 2. Once again, where do I place my initial stop? And we're going to use the same generic basic stop placement. We're going to go back in time. If this is where we're going to enter, we're going to go back and see where the last short-term pivot high was. And that's right here, okay? And this kind of creates this kind of an arrow approach. You have a high followed by a higher high and then a lower high. So this is telling you that this is some type of place where most likely price shouldn't come back to again. If it does come back and break above, well, most likely it's going to go higher, and that's where you want to be out. So we'll place our stop right here. Now we go to question number 3, which is, what is my profit target? Where do I get out if I'm right with a profit? And this is where the stop comes in handy. This is why we always want to figure out our stop before we figure out our profit target, because the stop, the risk will determine what our profit is. In other words, if we're going to be selling to go short here and we're going to be covering here, how much will we be risking if we're wrong? Well, you just determine the amount of points. In this case, it came out to 8.20 points. So once again, even before you get into the trade, you ask yourself, is that too much for me to risk, or is that okay? That fits in with my money structure. I have enough of a account to cover that. So if it's okay, well then great. So what you want to do is double that amount, okay? And we double that amount and we subtract it from our entry point. So double that amount would be 16.40. We subtract it from where we'd be entering right here. And then this is where we're going to be covering our short. Or if you had puts or some option, this is where you would be covering the option, where you would be selling, getting out. It's that simple. So this is where we're making twice the amount of how much we're risking. This is a good risk-reward ratio. Now, question number 4. Once again, we want to protect our profit. How do I protect my profit? If I have a good trade in place, I haven't exited yet with a profit, and I don't want to lose it all. We use the 50% rule. That means from where we enter to where we'll exit with a profit, we look at the half point, and that's right here, 50%. So if price comes close to or touching or below that, we will move this stop down. So let's track the trade. In 1, 2, 3 days, we got to the 50% level, okay? So we are no longer going to be keeping our stop here. We are moving it down to the entry price. Now we're playing once again with the house money. We're not risking anything. So if some news comes out or the market all of a sudden screams to the upside, we're not going to turn this winning trade into a loss and get out up here. We're going to just break even. It'll still hurt a little bit, but not as bad as if it were a loss, okay? I did that this morning. I intraday trade the minis, and I used the 50% rule, and one trade was a winner. Another trade, I broke even. So I had 2 trades this morning, and I had 1 winner and 1 break even, okay, which would have turned into a loss. That's how simple this is. I use all of these in my own personal trading. Okay, so we've hit the 50% rule. Now, once again, if we're trading correctly, it's boring. There's nothing to do. The only thing left to do is to watch the trade unfold. It's just to sit back and be similar to fishing. We just sit back and wait to see if it works out. So let's watch this trade. Let's see if it worked out, okay? Well, actually did. In about a week or so, we got down to that point and made 16.40 points. Very simple. We didn't have to look at any earnings to see what the earnings estimates were. We didn't have to listen to anyone on TV to figure out what they thought the market was going to do. We didn't have to look at any economic reports like the jobless claims or things of that nature. I stopped looking at economic reports 40 years ago. So I don't even know what they are anymore. Trading is simple once you get out of your own way. Just keep it very basic on things that work, like what I just presented to you, and you'll get that much more consistent. So this was my special holiday trading gift to you, but we're going to take it up a notch because everything you just saw, all these components make up two of the rules to strategy number 4. And this is the strategy that I personally trade. This is the strategy I trade when I trade the E-minis. I was trading strategy 4 today. And this is what we're going to be offering you today at a great, great discount gift. But first, let me tell you about some of the highlights. It's a pattern recognition strategy, okay? Basically, we're just looking at a pattern that repeats itself over and over and over again in any market. It's designed for traders looking to catch momentum. Now, the secret to this is oftentimes this pattern will generate a signal before it looks and appears that any momentum has entered. You know, how many times have you seen a market take off and you're like, okay, I want my strategy to generate a signal and it doesn't do anything? Well, strategy 4 will often generate signals when there is no momentum, when the market's kind of going sideways. And that's the beauty of it. You're getting in way before anybody else. And as we said, you can apply it to any market or time frame. I like to trade this on intraday E-mini charts, but we have traders using this around the world that use it on the forex markets, that use it on crypto, that use it on commodities. It makes absolutely no difference because it's based on a trend that appears, I'm sorry, not a trend, a pattern that appears in all markets and all time frames, okay? Now, here are the rules I'm going to be sharing with you today. Very simple. You actually have rule number 1. If price is above the 50-period simple moving average, the overall trend is up. That means we will only be generating strategy 4 buy signals if it's above the 50. Conversely, if price is below the 50-period simple moving average, the overall trend is down. That means strategy 4 sell signals will only be generated below. So it's already incorporated in. Here's the second rule. When a price bar closes in the top 25% of its range, the market is saying, I want to go higher on the short term. So what we want to do is see a bar that is above the 50-period moving average, and it closes in the top 25% of its range. That's the first 2 rules of strategy number 4. Now, conversely, if we're going short, when a bar closes in the bottom 25% of its range, the market is saying, I want to go lower on the short term. This means we're looking for bars that are below the 50-period moving average and also close in the lower portion, the lower 25% of their range. Now you notice here, I didn't say this is the economic indicators telling you that it wants to go lower, or these are the earnings telling you that. No, this is the only thing you should be focusing on. It's the market you're trading. That's the main thing you should be focusing on. It is the source of what you're trading. It's telling you, I want to go lower. So when you combine that with rule number 1, you have 2 very high-level consistency rules, okay? Now, I'm going to show you some recent strategy number 4 examples and show you how powerful they are using these 2 rules and how they incorporated those other components I explained to you at the beginning of the presentation. All right, here we're looking at a chart of team, all right? This is coming into the first week of December. Does there appear to be any momentum here at all? Absolutely not, right? Just going sideways. This is a sideways market. We're always taught to avoid these markets. But what's the first thing we do? We apply the 50-period moving average, and we see the price is above the entire time. So even though it looks like we're going sideways, the market is telling us, not some guy on TV, the market is telling us the overall trend is up. Now at the same time, we have rule number 2. Here we have a price bar that closes in the top 25% of its range. Now, we also have some other price bars that close in the high portion of the range, but they do not meet the remaining rules of strategy number 4. But this one did. So this is a buy signal, okay? This was on the 8th, just a couple of weeks ago. And look what happened. The stock shot up 32 points. Now, if you missed that one, there was another buy signal right after that right here. It's above the 50, and we closed in the top 25%. All right, let's look at this chart in NXP. All right, once again, kind of a sideways market, right? Not doing anything. But what's the first thing we taught you today? Apply the 50-period moving average and then ask yourself, where is price in relation to the 50-period moving average? Obviously, the majority of bars are closing below. Now, sure, we had 2 closing above, but remember, the rule of thumb is you need 3 to 5 closes either below or above to tell you the overall trend, and 2 just is not enough. So we're looking for bars that close in the bottom portion, the bottom 25% of their range. We have a number of them that close them here. We also have this one that closed here. Now, this is a valid strategy number 4 sell signal. And none of these others were, because they did not meet all of the rules of the strategy. But this one did. And this was on the 16th of October. And look what happened. 28 points in the next couple of weeks. Okay. Now, you could have used a standard stop, doubled your risk, and gotten out with a nice profit. You see how the same things I taught you in those gifts I gave you, the 4 components, how you could apply here as well. Here's another example of strategy number 4. Buy signal was generated just about a month ago in PDD. It's above the 50-period moving average. We closed in the top 25%. And right after that, 35 points. Now, look what happened here. We gapped up on the 28th of November, just a couple of weeks ago, most likely on some really good news, right? Or some, isn't it funny how strategy 4 already had you in the trade well in advance? This is another reason why most traders fail. You know, they're waiting for that guy in the chat room to tell them what to do, and he'll see this opening up and say, hey, you got to buy this stock. It's going much higher. Well, sure, but would you rather buy it here or buy it down here? This is the beauty of strategy number 4. How about CHTR charter? Okay, we are below the 50-period moving average. We look for a bar that closes in the bottom 25%. Well, here's one. Here's another one. But this is the one that met the remaining requirements of strategy number 4. So it's a valid sell signal. This was on December 4th, just about 3 weeks ago. And look what happened. In one day, the stock fell 40 points. So you think you could have doubled your money, your risk, I should say, by trading this, using those components I taught you? This is the simplicity of trading. When you get out of your own way, it's a lot simpler to be consistent than when you overcomplicate things. How about forex traders? All right, let's go back to about a month ago in the euro dollar. The same principles apply. Nothing has to change because we're looking at a different market. There's a daily chart of the euro. Price is above the 50-period moving average. We have some bars that close in the top portion of their range, but only these 2 bars met the requirements of strategy number 4 and 325 pips coming into December. Okay, now that was on a daily chart. Let's look at a 4-hour chart of the dollar yen. Same principles apply. We are below the 50, so we're not going to be a buyer at all. This bar right here meets all of the rules of strategy number 4 to go short. And look what happened. 425 pips in just a day. All right. Remember, this is a 4-hour chart. This is in the forex markets. What if you're a swing trader and like to look at longer term charts? Well, here's a weekly chart of Lulu. All right. Same principles apply. Nothing changes in the rules because we're changing the market or the time frame. Here's a weekly chart. All these bars are weeks. We are above the 50-period moving average, so the overall trend is up. We close in the top 25% of the range, so this meets the second component of the strategy. And lastly, all the rules are in place, so this is a buy signal on a weekly time frame. Over 100 points coming into this month, okay? This is all because we're simply following the same components we taught you earlier. Okay, so let's review what we share with you today. Remember, I share with you my holiday trading gift. You can apply to any strategy you currently trade or construct one on your own. And we really feel that they will increase your odds for consistency, but you have to ask yourself these 4 questions before you actually take the trade. The first one is, am I on the right side of the market? And the best way to do that, in our opinion, is to apply the 50-period moving average. If price is below the 50-period moving average, that means the overall trend is up. Is down. If we are below the moving average, the overall trend is down. That means you cannot be buying because you'll be out of sync and not on the right side of the market. Conversely, if price is above the 50-period moving average, the overall trend is up, and you should not be selling to go short because you're out of sync with the market. You're not on the right side, okay? How about the second component? Where do I place my initial stop? Once again, in our courses, we teach you upwards of 6 or 7 different stop placements. One of the most basic is just to go back and look at the most recent short-term low if you're buying, or most recent short-term high. But the reason why we ask ourselves what the most important question is before our exit is, why do I want to know about my initial stop first, is because that's going to help us determine the next component, which is your profit target. Remember, we always want to make at least twice what we're risking. So that's why you need to know your stop placement before your exit. Okay? So if you're risking 5 points, then you want to know that you're going to be exiting with a 10-point gain. Then lastly, the last question is, how do I protect my profits? Well, then you use the 50% rule. Once you get roughly halfway, it doesn't have to be exact. It can be a little bit before, a little bit after. But once you get in the vicinity of 50%, half the distance to your exit, move your stop to unchanged. That way, if all of a sudden something changes out of the blue and price starts to go against you, you won't lose any money. The worst feeling in the world is to know you had a profit and then you gave it all away. Okay, so this way you're protecting yourself. Now, these components are all in place in the strategy number 4 course. So let's close with what my mentors taught me and what I still use in my trading today, that trading is really simple. It is the trader who makes it more difficult than it has to be. If you're following 5, 10 markets the way I used to, I actually follow close to 50 or 60 markets because that's what my job was as a specialist. But if you're following far too many markets, far too many time frames, if you have far too many indicators on your screen, if you're in far too many chat rooms or looking at far too many blogs and reading what these guys are saying or watching far too many guys on TV and listening to them, you're overcomplicating your trading. And it's not supposed to be overcomplicated like that. Trading is like fishing. You have a simple but consistent plan in place, and then you wait. If you are trading correctly, like a professional, not like a gambler, but like a professional, it's very boring. That's how you know you're doing it right. All right, now I want to give you a great discount today for taking time out of your Wednesday this week. All right, we're going to offer you the strategy number 4 course at a great discount. Remember, this works on all markets and on all time frames. You're going to get instant course access, detailed instruction. You'll learn all the different entries, exits, and stop placement. All right. You'll also get the signal alerts. You get the complete course rules along with a conservative as well as an aggressive way in which to trade it. Now, everything you saw today was coming from our platform. So the extra bonus we're also including is you're going to be getting a full free year of the PTS Primo Charting platform. That's going to be included. Now, sure, you can learn the rules of strategy 4 and apply them onto any platform. But remember, everything is one click away. You have the up and down arrows telling you exactly where the signals are. You can have with one click know where these exit levels are and where your stop placement is. So it's all right there on the PTS Primo Charting platform. We're going to throw in a full year free. That's close to a $2,000 bonus right there. Remember, the PTS Primo Charting platform is something I developed with ProTrader Strategies actually to make trading simple so that it could teach traders how to trade. And we've had tons of testimonials and comments from traders who love it because it makes trading really so much more simple to use. All right, so let's break it down. Strategy 4, along with a full year of the platform, normally just strategy 4 by itself would cost close to $700. We're going to throw in strategy 4 along with the platform and slash that price down to only $347.50. Think of it. You're going to get a nearly $2,000 value for 1 year of the platform. You're going to get a $700 value slashed down to $347.50. So you're going to be saving tons of money, roughly about $2,400 just on this simple, great gift to you. This is my holiday trading gift to you, slashing this down. We haven't had this low in a long time. So take advantage of this. This is for a limited time only. Think of it. For less than $350, you can be up and running with a strategy I use on a daily basis. And on top of that, you'll have educational correspondence with yours truly, okay? Here's how to take advantage of this great, great discount. Because remember, a year from today, trust me, you will have wished you became a member of the strategy number 4 course. A year from today, this course may be selling for upwards of $2,000, maybe $3,000. Take advantage of this deep discounted price. Contact my sister site, ProTrader Strategies. You can email them there at trading@protraderstrategies.com. The best way to contact them, in my opinion, would just simply to give them a call. Area code 310-598-6677. They would be more than happy to give you a quote or on the price if you can't come up with the $347.50. I'm sure most of you can, but they would be happy to tell you more about the platform, give you any ideas about any other methods we have that may be discounted. But there's the ones to talk to, and they can take your order over the phone right now. Now, that link you see at the very bottom is the link that will take you to the info as well as sign up page. It's not a live link, but we've posted a live link in the chat box. So if you go to your chat box, little icon there, just click on that chat square there, and you'll see at the very bottom there is a link there. Just click it on and it will open up a browser for you, okay? Now, I want to thank you for attending today. I promised I would take the last portion to answer any questions. So if you have any questions about what we went over today, now's the time. Just go to your chat box or to your question and answer box, and I'll go over the questions. I see we have one here in the chat box. It says, your charts show daily or more time frames, but you said the strategy applies to any time frame, right? Yes, it applies to any time frame. I showed you a 4-hour chart of the euro dollar. I showed you a weekly chart of Lulu, I believe. I also showed you daily charts. So it makes no difference. I showed you 3 different time frames and a couple of different markets. So yes, it's very versatile. And I really have never liked the notion of, I've seen other webinars before where someone has some phenomenal strategy and they say, well, this is only good for a 15-minute chart of Apple. It doesn't work on anything else. And I'm thinking, why? It's strategies should not be that exclusive just to one market or time frame. If it's really worth its weight in consistency, it should be able to transfer over onto 90% of all markets and time frames. And that's what strategy number 4 is, okay? So yes, pick any time frame, any market. Like I said, I personally use up intraday trading of the E-minis. And when I finish it today, I'll go back to trading the E-minis. So it makes absolutely no difference, okay? That's one of the beauties of strategy number 4. You can trade multiple markets and you don't have to buy a brand new system or strategy. It's right there for you, okay? Any other questions? Let me check the question and answer box. Okay, here's my most common question. What does the educational correspondence mean? Correspondence simply means that every one of you will get my personal email address once you become a student of mine, and you can contact me whenever you'd like. So if you have questions or you're not understanding a particular portion of the rules of the Strategy 4 course, you can contact me on the weekend before the opening, after the close. It makes no difference, and I'll get back to you right away, okay? So that's what we mean by educational correspondence. Is there a next question? Is there a live class that we'll be attending? No, this is actually a video that is sent to you. You will be getting the link and you'll be watching it, or you can also get a PDF, I believe. You can take your choice, and you can get the rules either way, okay? But either way, strategy number 4 is actually very simple. It's very simple and easy to understand. If you have trouble, I'll be right there, right by your side to help you understand it, and you'll be up and running right away, okay? And we have a great tech support, and they can also hook you up with the platform. You're going to be up and running as early as today, okay? Any other questions? Someone's asking me, what time frame do I trade? I trade multiple time frames. I trade 5-minute, 10-minute. I trade tick charts. It makes no difference. I just look around to see different time frames that are showing where the signals are. So we want people, remember, to pick the time frame that you choose, okay? Because everyone's different. Everyone finds out what time frame works for them. Okay, remember, if you're at all interested, I would highly, highly recommend giving ProTrader Strategies a call at 310-598-6677. They can set you up with this right away. You can get all the strategy number 4 course material sent to you today, as well as have the platform set up for you right away through our tech support. So this is a great, great offer, and I can't think of a cheaper price. In fact, we've never had it at a price lower than this. So for less than $350, you can be using a strategy that I've been using for over 4 decades, okay? This was a strategy that was first taught to me by my mentors on the floor of the stock exchange, and I continue to use it today. So remember, give them a call, and there's no obligation. If you have more questions, they would be happy to answer them for you. Now, as we close up today, I just want to wish everyone happy holidays, and most especially as we take a look at our disclaimer, thank you so much for taking time out of your Wednesday, but I look forward to all of you becoming students of mine in the same strategy that I trade, the Strategy Number 4 course. Thank you so much. Have a great weekend, a great holiday, and I'll see you next week. Bye-bye.